Hey guys, it is January 23rd, 2026 here with your after hours recap. So, what a week. What a week. We could talk a little bit about the metals. We could talk today about the banks. We could talk today about some biotechs. So let's just kind of start to dive into it. Obviously, we are in the middle of earnings season, and some pretty notable names have reported. Wells Fargo being one of those, and you get the earnings gap down, and then you get, the multi-day slide. You recently got Intel yesterday, and what did you get? You got the gap down, and then you got about the all-day sell-off down 17%. And I don't know if and when the market is going to start to rebound this name, but that is where we're at the moment. You recently have had a General Electric, and look at what's happened ever since earnings. You just continue to slide now below the 50 simple moving average. All things told, obviously, this has still been one of the best winners over the last couple of years. And a General Electric, a little bit beaten up here, a worse for the wear. Netflix, you have obviously been underperforming the market, and you finally kind of gapped down as well on earnings, and you've just been kind of chopping around ever since earnings, but really not that good in a definitive stage 4 downtrend, followed up by a lot of software names. Now, today was a little bit interesting. We did have Microsoft over the last few days, put in what looked to be maybe a little bit of a capitulation, a couple of up days in a row, but how many stocks of Microsoft size have just been, in like this very steady downtrend leading up to earnings, and then maybe that creates an opportunity to buy before earnings. And you also had a few other software stocks today. I noticed like NOW perking up. I noticed like Intuit perking up. But I don't want to make too much of it because we have seen this movie before where, you get a rally back into like a declining 50-day, a declining 200-day, etc. And then all you really do is end up rolling right back over. So software right now is a no touch in my book. Obviously, everywhere else that you look, that's like from the emerging markets, like an EWZ for Brazil, fantastic breaking out. If you looked at like the EEM, or if you looked at like the SPY by the EEM, you'll notice something very important, which is that right now our S&P 500 is definitely breaking down versus emerging markets, whether it be China, Vietnam, Colombia, Poland, just every other emerging market, Brazil, Argentina, right? Just look at the Argentina ETF, really starting to potentially push out higher here out of a really, really nice multi-year base, really nice move up, nice contraction, nice sideways, nice breakout. EWZ, similar thing. If you looked at COLO or COLO, the ETF for Colombia, really, really nice strength here as well. Just so Latin America, again, Vietnam's been a good one. Mexico has been a good one. And that is definitely a theme that could very well continue to play out over the coming months or the rest of this year. That would be pretty interesting. And you're seeing it kind of in our tech names, especially software related, the biggest names in the world in the United States, right? Whether it be Apple, not looking the best here, not a very appetizing chart. It seems like the path of least resistance is lower. I'm not going to get fooled into a couple of day bounce in a Microsoft. It does look like the path of least resistance is lower. We have seen it now. Again, I'm not trying to compare a Spotify to a Microsoft, but you are completely breaking down path of least resistance. Looks lower. NOW, same story, path of least resistance against lower. Palantir, which has been looking like a late stage base, something that I've kind of been talking about and touching upon for the last few months. You think about how big this move has been. One of the things to remember is that typically 18 to 24 months is about how long you'll get out of an earnings winner, out of a thematic winner. A lot of these stocks, they have been going for months on end, and you finally get what looks to maybe be a rolling top on Palantir. I would not be too surprised if we are below the 200 simple moving average here pretty soon, considering we really haven't tested it since August of 2024. So My guess is potentially lower on some of these names. It's also good to note what the XLF is doing, which is the financials. You kind of look at JP Morgan breaking down here below the 50 simple moving average. Not the best look. We obviously talked about Wells Fargo sliding on earnings. Not the best look. You look at a Citigroup. This is looking a little bit like a bear flag and potentially ready to head lower as a failed breakout. And that would be, kind of alarming. The KRE recently, which I thought, could be breaking out. All it really did was hit its highs from November of 24 and then fail pretty hard. What did that cause? That caused a slip today in the IWM. Now, nothing truly wrong with the IWM, but it is good to kind of take note of what you are seeing. ARKG, one of those where you thought maybe genomics yesterday were going to get going. And nope, what did the genomics names do? They got absolutely pummeled. You hit that left side peak today, you're completely rolling over. And you look at a name like TEM, continues to act just like TEM does, below the 50, rejecting there. CRISPR, one that had a really nice day yesterday, rejecting really hard. And that is part of the theme of the market, right? You get these really nice moves, and then a few days later, you're just rejecting. Reddit, similar story. You get what I thought was a pretty nice entry here, and just a few days later, shaking you out, and then a few days later, just lower. That is the kind of nature of the market at the moment. Can't really make too much of it more than that. I did have a piece of APLD yesterday. Unfortunately, it really didn't get going, and then I didn't buy this one back today. Very, very nice push. I did buy some Cypher. I thought, that was a, pretty nice one. I bought it right back through 17 bucks. Very nice little setup. Going back through the 50 simple moving average, right on the daily. Pretty straightforward setup. And then I did trim some off right into yesterday's highs, about $18.20 roughly. So that was good to take off a little piece there. I did go ahead and trim up a little bit more of my XOM. A little bit of an oddball close, into some weakness, and I'd rather kind of not deal with a full position. A part of me thinks that nat gas is ripping, and this might be right or wrong. Nat gas is ripping because of the cold snap that we're all kind of in across the entire country, unless you're in South Florida or Arizona. Congratulations. But if you're in the Midwest, like I am, it is pretty damn cold here. And I felt that some of these names, in particular XOM, was a beneficiary of nat gas going higher. But when we kind of started to falter today, really, once we kind of get through this little cold spell, and if nat gas rolls over into next week, I didn't really want to hold a position that I haven't trimmed for an entire month. Still sitting in there, basically full size. I did trim some off 133. I did trim a little piece off today as well on XOM. So I'm just sitting there completely trimmed, completely comfortable. Alibaba, similar story today. It started to act a little bit weak. Even though it had some pretty good news yesterday, I did just go ahead and take off another piece of my Alibaba. Happy to just let that work. And really, that's just kind of been the theme of the market. You had home builders as well. I would say pretty unimpressive. Another little down day here. Toll Brothers is the one that I'm watching if and when this thing ever wants to get going, but I'm not really going to force my way into any of these stocks. We haven't really had the cleanest of trends, unless it's just been, some of the rocket stocks, and even, Rocket Lab, I thought was a pretty nice little bounce off the 20-day yesterday. But if you don't take some off today into the close, you are effectively round tripping today's move, and that is kind of a pain in the butt. Massive move today in silver futures. We are officially up and over $100. Excuse me. We are officially up and over $100. Really nice action within silver. Obviously, I think we're getting a little bit extended. I, of course, tried a short, and I've tried my hand at SILJ a handful of times. I did, kind of a something that I shouldn't, which is hold a small red really into an overnight weekend with no cushion. Got hit with the gap up on Monday or on Tuesday, excuse me, on SILJ. Again, a bit of a lesson learned there. I thought We're getting pretty extended on this SILJ. Hecla at one point, kind of acting a little bit weaker, and I was like, okay, let me go ahead and try this again and see if this thing finally wants to roll over some. Nope, not at all. I mean, there's a lot of short sellers, myself included, who kind of got their butts kicked in silver. I have been trying SILJ over the past couple of sessions. I've also been trying some SLV. I don't really want to get too stubborn with this stuff, but on the daily, really just like anything else, you start to go vertical. Eventually, the move ends. We don't know when that move is technically going to end, but we are getting quite extended away from the 50 simple moving average. And, for that reason, that's kind of why I'm attracted to the idea. But obviously, it is not an idea that has been working. One of the best things that I have been doing, with the exception of that Monday gap up, is trying to keep smaller size and then just letting it, adding more as it's working. The problem is it hasn't been working, so I really haven't been getting the opportunity to just sit there and add and add and add and add and add to my winner. That's kind of the scenario that I'd rather be in versus just add to my loser, and then end up with some really, really big outsized loss. So not necessarily a trade for everybody, which I totally get. And I would probably say, looking at my Netflix trade, which I shorted 2.5 months ago, basically, in November. Or 2 months ago, excuse me. This is the sort of trade you really want to be in if you want to play the short side. Focus on things below the 200 simple moving average, playing a parabolic move, whether it's an SMCI back in the day or MSTR in November of 24 or even a UAMY. Every now and again, you time it up right, but other times these things can just keep squeezing, and they can definitely make somebody who digs in a little bit too hard on the short side end up with an outsized loss. So that is not something that you necessarily want. Obviously, it happens to the best of traders, but just try your best to not get too stubborn. NEM, another long that I do own, which is a gold miner, coincidentally, and here I am, obviously shorting some silver. I've owned this thing since the beginning of December. Really, really clean, beautiful trend, but as we're getting more extended, we are about 8 times plus its ATR from the 50. I have been trimming some off over the last handful of sessions, just slowly trimming some off as it's going higher. And that will kind of remain the plan until we get, 11, 12, 13 times its ATR from the 50. And then at that point, I will just, gladly let it go. It was a great trade. I don't really need too much more than that to be a happy camper. And I don't know what else may have transpired today that was pretty interesting. Obviously, we had, over the last couple of days, AMD be super strong. All it really did was bump into this left side peak, decide to digest a little bit. We had Microsoft, obviously, today wake up in a pretty big way, but nothing really to do there. Apple, we have just really no strength in this one. You had a few of the, the OpenAI related names catching a little bit of a bid today, and then that obviously caused a little bit of weakness in Google. I don't really want to read too much into that myself, because Google, I think, is still one of the better names out there, just in a very, very clean trend, not being extended at all. I also held my Nvidia short, and I still don't necessarily love what this thing is doing. You had a piece of news where China said, hey, you can kind of get your H200 orders ready. Okay, that's totally fine. And then I was like, oh shit, well, I wake up in the morning, and my plan was if we would take out yesterday's highs, I would get out, but I wake up in the morning and this thing's gapped up. And I'm like, okay, well, shit, let me just, kind of see what happens after the first 5 minutes. And I told myself that I would be using a 5-minute opening range break as my stop. Well, you got yourself a 5-minute squeeze and then a complete dump. And then it proceeded to do absolutely nothing all day. So I did go ahead and keep my Nvidia short so long as we are staying below that 5-minute opening range high. That will kind of be my line in the sand. If by chance we are breaking back through the 50 simple moving average, I would be adding to this position on the short side as well. So it's not a huge position at the moment, but I would be happy to add to it if it's going to work. Again, I don't really look at this as the most, it's not the world's worst chart. But again, think about where we have come from. Think about what other software stocks are doing at the moment. And then really, and I'll say this, the SMH to me still looks fine, but where is the technical setup to buy this? And then I would tell anybody, find me a semiconductor stock, maybe outside of Nvidia, that potentially looks ready to go higher. Even an AMD for me needs to, it's built now a cup. It would now need to build out a handle here for the next couple of days, and then maybe it's ready to go higher. Obviously, we're in the middle of earnings season, and when I just kind of think about all the things that I just laid out, software acting poorly, even an app loving potentially breaking down. You look at it even like at a potential Carvana, hitting a little double top and then today rolling over. I'm not saying Carvana's, done, but you just have a handful of these stocks, that have been on runs for a handful of years. And I wouldn't be too surprised at all if we see some more digestion in the market over the upcoming week. What is leading right now is emerging markets. That's not to say that the QQQ can't just continue to show some power, and then we are just a couple of percentage points away from an all-time high, 2-3%, and then I would have to kind of change my mind. But my problem, I think, is a simple one. It's a choppy market, right? A sideways choppy market more than it is an uptrending market where there's a proliferation of clean setups and stocks ready to go higher. Hence the reason why it can't just be me dealing with a bunch of chop. Or maybe it is just me. And all you guys have just nailed the best stocks in the market since the beginning of the year. And I know some people who have. And that's amazing. That is exactly what you want to do. You want to be in SanDisk. You want to be in WDC. You want to be in MU. You maybe want to own an XOM. You maybe want to have shorted software. And if you've done everything right, you're having a killer year. If it's been a little bit more difficult to navigate, it has been a little bit choppier for myself. It's not like I'm, getting absolutely crushed, but it has been pretty choppy for me since December. December was a small red month. And January has been so far a red month. So, and part of it is stock selection, right? It's just been simple stuff like instead of buying Rocket Lab yesterday off the 20-day, I'm buying APLD, right? I mean, that's part of my issue. I'm buying APLD yesterday and I'm not buying it today. So that's just part of the, what's happening to me, in that front. On the day when I'm supposed to buy SNDK on the breakout on the second at 247, my alert goes off. What am I doing instead? I'm buying A-Lab, thinking this is a low cheat setup, and I'm buying Reddit, right? So just piss poor stock selection, and then really the market just fairly poor follow through while trying to get positioned in some of these names, just not enough follow through. So it's some of it's my own doing, and I kind of got to take the brunt for that, and it's not a big deal. We live and we learn. We have to keep executing. You have to keep finding stocks. Even a GRAL, which I thought was a pretty nice setup yesterday. You're kind of breaking out of this low cheat setup. You're taking out this very, very tight Wednesday's day. You're even clearing Tuesday's high, and all of a sudden, if you're not selling into this and you'd be looking really smart, you'd be like, man, I nailed that. All of a sudden you're basically giving it right back to your entry. So that's just part of the environment that we're in right now. Again, a little bit frustrating. It is what it is. The markets will turn. I think one of the adjustments, at least for myself, and happy to kind of talk about it, is I plan on buying more undercut and rallies. I plan on buying more shakeouts, and then just trimming a piece on day one, a piece on day two, until I can look at a stock and say, man, I shouldn't have trimmed so much. I've only got 30% of my position left on day three. And then being a little bit frustrated that maybe I don't have as much left, because when you're in a choppy environment, you get to Rocket Lab on day two if you bought it yesterday, and part of you starts to say, man, I wish I would have trimmed a little bit more into that 93 level, right? I look at BABA when it hits that 180, right? This left side peak basically, and I say to myself, man, I wish I would have taken a couple more off. Instead, your close a little bit weak, you gap down overnight, you sell off just a little bit on the day. Not like it's a huge deal, but it's just kind of the environment that we're in. You get a really nice push, and even like Cypher today. I buy this undercut and rally at 17. Once we start to get into yesterday's highs, in the back of my mind, I'm over here sitting, thinking to myself, you know what? Let me just go ahead and peel some off. So we start to roll over just a touch, and I start taking some off at 1820s, and I'm like, you know what? Okay, that's fine. That's probably the right idea after this really really nice move. And again, end of day, it ends up closing weak. Now instead of being up, $1.50 per share, and if it had closed at highs, I'm up 60 cents a share. So not as comfortable if you're not selling some off into this strength. That's just the reality. It's okay to buy a shakeout, right? Or even a shake of prior day low, or even almost the low before that. For me, it was just a reclaim of the 50, but buying a shakeout and then trimming some off into supply just feels like the best move right now. And that's probably what I'm going to continue to do doing forward or moving forward until I sell too much of a position. And then I realize, like, hey, you know what? I probably have sold a little too much of this. It just continues to work and work and work. And then I buy another one that maybe I sell a little too much too soon. And then that one just continues to work and work. Versus just kind of ending up in a scenario where I'm just round tripping gains because I'm being too patient in the environment that we are in. You have to kind of recognize the change. And that is, something that, I maybe haven't done quick enough is, being fast to take some gains off the table, right? I always want to be as patient as possible. I've been patient for a month in XOM, and we are effectively at, highs of the entire move, right? So I want to be patient in trades, especially, monthly and weekly basis like this. I want to be patient as I can in these, kind of monthly breakouts, as I can be. But at the same time, I don't want to give back too much of my profits and make sure that I'm paying myself into some strength and then just continue to let things work from there. So a little bit of a frustrating environment. It is what it is. We chose to do this for a living, so no crying at the casino. But hopefully you guys are all trading well. Please stay safe out there. Enjoy your freezing cold weekend. Make some hot cocoa and relax inside. Watch a movie. Unwind. I know that's definitely what I'm, thinking about doing here for this weekend is staying in and just relaxing and, staying out of the cold. So hopefully, again, you guys all had a much better trading week than I did. And I look forward to seeing you guys all on Monday. Cheers.